What if I told you that right now, in 2025, there's an ETF that could transform your $10,000 investment into $1.6 million? And no, this isn't some risky crypto play or a speculative penny stock. We're talking about regulated, established ETFs that are perfectly positioned for explosive growth in today's dynamic market environment. The market landscape of 2025 presents an unprecedented confluence of opportunities. Artificial intelligence is fundamentally reshaping entire industries. Clean energy has evolved from a mere trend into an economic revolution, and emerging markets are shattering traditional growth patterns. Yet amid this transformation, most investors are missing the hidden opportunities lying in plain sight. Opportunities that specific ETFs are uniquely positioned to capture. While the majority of investors remain fixated on yesterday's winners, I've identified 6 powerful ETFs that are strategically aligned with tomorrow's growth catalysts. Each selection emerges from rigorous analysis of market dynamics, growth trajectories, and risk-adjusted return potential. These aren't random picks. They're calculated positions designed to capitalize on the most compelling trends shaping our financial future. Consider this. One of these ETFs taps into an emerging market poised to outperform even China's most impressive growth years. Another captures the massive infrastructure revolution that's quietly transforming our energy grid. We'll explore a dividend strategy that's not just surviving inflation, but thriving in it, building generational wealth for informed investors. And perhaps most intriguingly, I'll reveal a leveraged blue-chip approach that amplifies returns while maintaining a surprisingly balanced risk profile. But here's what makes this analysis truly valuable. Beyond just identifying these opportunities, I'll show you exactly how to position them within your portfolio for maximum effect. By the end of this video, you'll understand not just what to invest in, but why these particular ETFs are uniquely positioned for 2025's market dynamics. Before we dive deep into each opportunity, let me share something crucial. If you stay until the end, I'll reveal a powerful wealth-building strategy that demonstrates how a modest weekly investment of just $30 could generate over $5,000 in monthly income. This isn't theoretical. You'll get the exact framework, complete with implementation steps and real-world performance metrics. First, let's understand why ETFs have become such a critical investment vehicle in 2025's market environment, and more importantly, why selecting the right ones could be the most important investment decision you make this year. Before we dive into these game-changing ETFs, take a second to hit that subscribe button and notification bell, because building wealth is better when you never miss a strategy. Let's make those returns. The 2025 Wealth Building Blueprint that's hiding in plain sight. Let me pull back the curtain on why ETFs have become the secret weapon of sophisticated investors in 2025's complex market landscape. Imagine having the power to tap into entire industries, global trends, and revolutionary technologies with a single investment. That's the modern ETF advantage, but there's so much more beneath the surface. Think of ETFs as your personal investment squadron. While individual stocks are like sending a single soldier into battle, ETFs deploy an entire army of carefully selected assets, each playing a strategic role in your wealth-building mission. In 2025's volatile market environment, this diversification isn't just an advantage. It's becoming essential for survival and growth. Here's what makes ETFs particularly powerful right now. They've evolved far beyond their simple index tracking origins. Today's ETFs are precision instruments, capable of targeting specific growth catalysts while maintaining surprisingly low costs. With expense ratios often below 0.5%, you're keeping more of your returns where they belong, in your portfolio. But here's the strategic insight most investors miss. ETFs in 2025 aren't just about diversification. They're about capturing convergence points in the market where multiple growth catalysts intersect. Take our first ETF pick, for example. It's positioned at the crossroads of AI implementation, infrastructure modernization, and sustainable energy adoption. This triple threat positioning is what creates the potential for exponential rather than just linear growth. Let's talk about risk for a moment, because this is where ETFs truly shine in 2025's market environment. The old saying, "Don't put all your eggs in one basket," has never been more relevant. But modern ETFs take this wisdom further. They let you own the entire farm, complete with multiple baskets, automated egg collection systems, and even the distribution networks. This comprehensive approach helps protect your investments from company-specific risks while maintaining exposure to sector-wide growth. Understanding this foundation is crucial because it sets up the framework for the 6 high-potential ETFs we're about to analyze. Each one has been selected not just for its individual merits, but for its strategic role in capturing the most powerful market trends of 2025 and beyond. Number 6. Schwab U.S. Dividend Equity ETF, SCHD. In today's dynamic market landscape of 2025, let me guide you through what I consider the cornerstone of intelligent wealth accumulation. The Schwab U.S. Dividend Equity ETF, SCHD, ranking 6th on our elite ETF list, emerges as a masterclass in combining steady income with powerful growth potential, offering a sophisticated approach to building lasting wealth. At its core, SCHD presents a compelling investment thesis with a robust 3.39% dividend yield, complemented by a remarkably efficient 0.06% expense ratio, translating to just $6 in annual fees per $10,000 invested. Yet what truly distinguishes SCHD is its exceptional combination of a 12% dividend growth rate paired with a consistent 7.95% share price appreciation, creating a powerful wealth-building engine that compounds over time. Let me illuminate the wealth-building potential through a detailed analysis of a $10,000 investment trajectory. In your first year, the foundation is laid as share price appreciation pushes your initial investment to $10,795 while generating $339 in dividend income, bringing your total portfolio value to $11,134. This initial growth sets the stage for an impressive compound growth journey that unfolds over decades. By year 5, we see the compounding effect gaining momentum. Share price appreciation elevates your base investment to $14,677, while cumulative reinvested dividends contribute an additional $2,153, resulting in a total portfolio value of $16,830. At this stage, you're generating monthly dividend income of $45.32, demonstrating the beginning of a meaningful passive income stream. The 10-year milestone reveals even more compelling results. Your share price component expands to $21,544, with reinvested dividends accumulating to $6,178, bringing your total portfolio value to $27,722. Monthly dividend income now reaches $94.55, showcasing the growing strength of your income-generating foundation. As we extend our analysis to the 20-year mark, the power of compound growth becomes undeniable. Share price growth reaches $46,397, while reinvested dividends compound to $38,403, culminating in a total portfolio value of $84,800. Your monthly dividend income grows to an impressive $287.32, representing significant progress toward financial independence. The 30-year horizon reveals the true magnitude of patient wealth building. Your share price component grows to $99,927, while reinvested dividends expand dramatically to $133,573, resulting in a total portfolio value of $233,500. This generates monthly dividend income of $988.45, a testament to the power of compound growth and strategic dividend reinvestment. These projections, grounded in SCHD's verified performance metrics, combine the 7.95% annual share price appreciation, 3.39% initial dividend yield, and 12% annual dividend growth rate. Importantly, these calculations present a conservative baseline, as they don't account for potential market outperformance or the impact of additional periodic investments. The strategic advantage of SCHD lies not just in its numbers, but in the quality of its holdings. You're gaining exposure to companies characterized by rock-solid balance sheets, consistent cash flow generation, proven business models, and established competitive moats. This quality foundation becomes particularly valuable during market stress periods, where these companies have historically demonstrated their ability to maintain and grow dividends while others might falter. With an impressive track record of 19.85% return over the past year and 53% over the last 5 years, SCHD exemplifies how steady, reliable growth can generate substantial wealth over time. Consider positioning SCHD as your portfolio's bedrock, a foundation stable enough to weather market volatility while powerful enough to drive significant long-term returns. This approach provides the perfect base for incorporating our upcoming higher growth ETF selections, creating a balanced portfolio designed for both stability and growth potential. Number 5. Invesco S&P 500 GARP ETF, SPGP. Have you ever wondered why some investors consistently outperform the market while others chase endless hype cycles? In 2025's complex market landscape, where AI speculation runs rampant and valuations often defy gravity, there's a smarter way to capture growth without overpaying for it. Enter the S&P 500 GARP ETF, ranking 5th on our elite list. A sophisticated answer to the modern investor's biggest challenge: finding sustainable growth at reasonable prices. Think about this. While amateur investors toggle between overpriced tech darlings and stagnant value traps, SPGP has mastered the art of identifying companies at the sweet spot of innovation and financial responsibility. Imagine capturing the growth potential of a breakthrough AI company that actually generates substantial cash flow, or investing in a healthcare innovator, revolutionizing patient care while maintaining a rock-solid balance sheet. This is exactly what SPGP delivers, all while charging a modest 0.36% expense ratio. Just $36 annually per $10,000 invested for this sophisticated investment approach. SPGP's portfolio reads like a masterclass in intelligent growth investing. By focusing on companies with strong earnings growth and reasonable valuations, it's positioned to capture the most compelling trends of 2025, from AI implementation to healthcare innovation, from clean energy adoption to financial technology revolution. Its impressive metrics tell a compelling story. A 1.31% dividend yield, 11.27% dividend growth rate, and 12.89% share price growth. Let me translate these powerful numbers into your wealth-building journey, starting with a $10,000 investment. In your first year, share price appreciation grows your investment to $11,289, while generating $131 in dividend income, totaling $11,420. This is where your compound growth journey begins, but it gets even more interesting. By year 5, your investment expands through share price appreciation to $18,332, with reinvested dividends adding $820, bringing your total portfolio value to $19,152. You're now generating monthly dividend income of $43.85, seeing the early signs of a growing passive income stream. The power of compounding becomes evident at the 10-year mark, as your share price component reaches $33,615, with reinvested dividends contributing $3,785, totaling $37,400. Monthly dividend income grows to $127.45, demonstrating the acceleration of wealth creation. Fast forward to year 20, and watch your initial investment multiply as share price growth hits $113,072, while reinvested dividends add $24,928, reaching a total portfolio value of $138,000. Monthly dividend income now provides $482.65, showing the real potential for significant passive income. By year 30, the full power of patient investing reveals itself. Share price growth reaches an impressive $380,433, with reinvested dividends compounding to $119,567, bringing your total portfolio value to $500,000. Monthly dividend income now sits at $1,847.50. transformative wealth built through disciplined investment in quality growth. SPGP's track record validates this approach. 14.95% year-to-date return, 19.87% over the past year, and an impressive 82.78% over 5 years. These aren't just numbers. They're proof of SPGP's ability to identify tomorrow's winners while they're still reasonably priced today. What makes SPGP particularly compelling in 2025's market is its sector-agnostic approach to finding growth at reasonable prices. While others chase headlines, SPGP follows the fundamentals. In a market where speculation often outpaces fundamentals, this disciplined approach to growth investing becomes even more valuable. It's not just about finding growth. It's about finding sustainable, profitable growth at prices that make sense. Number 4. First Trust Nasdaq Clean Edge Smart Grid Infrastructure Index Fund ETF, GRID. In a world racing towards an electrified future, have you ever wondered how to profit from one of the most significant infrastructure transformations in human history? While the headlines focus on flashy electric vehicles and solar arrays, smart investors are looking deeper at the critical infrastructure that makes it all possible. Enter GRID, our 4th-ranked ETF, which offers unique exposure to the backbone of our electric future. Imagine a future where every building, vehicle, and device is interconnected through an intelligent power network. This isn't science fiction. It's unfolding right now in 2025. The global smart grid market is experiencing unprecedented growth, driven by massive government infrastructure spending, aggressive corporate clean energy commitments, and the unstoppable rise of electric vehicles. GRID positions you at the heart of this transformation, offering exposure to the companies building tomorrow's intelligent power infrastructure. Let me show you how GRID's powerful metrics: 1.08% dividend yield, 8.98% dividend growth rate, and 13.33% share price appreciation could transform your wealth-building journey. Starting with a $10,000 investment, your first year sees share price growth pushing your initial investment to $11,333, while generating $108 in dividend income, bringing your total to $11,441. The 0.57% expense ratio, 57 annually per $10,000 invested, seems minimal considering the growth potential it unlocks. By year 5, your investment grows substantially through share price appreciation to $18,839, with reinvested dividends adding $646, bringing your total portfolio value to $19,485. Your monthly dividend income reaches $39.87, representing your stake in the modernization of global power infrastructure. This growth continues to accelerate as the smart grid revolution unfolds. At the 10-year milestone, the power of compound growth becomes evident as your share price component expands to $35,478, with reinvested dividends accumulating to $3,522, totaling $39,000. Monthly dividend income flows at $135.42, demonstrating how patience in infrastructure investment pays off. Think about it. This passive income stream is generated by the very infrastructure enabling our electric future. The 20-year horizon reveals the true potential of this energy revolution. Your initial $10,000 grows through share price appreciation to $125,876, while reinvested dividends add $24,124, reaching a total portfolio value of $150,000. Monthly dividend income surges to $521.74, showing how early positioning in critical infrastructure can generate substantial passive wealth. By year 30, the transformation is complete. Share price growth reaches an impressive $446,628, while reinvested dividends compound to $103,372, bringing your total portfolio value to $550,000. Monthly dividend income now powers to $1,927.08. Wealth built by investing in the foundation of our electric future. Consider what's driving this remarkable growth trajectory. Every major economy is pledging unprecedented resources towards grid modernization. The European Union has committed over 500 billion euros to power infrastructure through 2030. China's smart grid investments are scaling rapidly, while the U.S. infrastructure bill allocates massive funding to grid modernization. These aren't speculative bets. They're funded, long-term infrastructure commitments. But here's what most investors miss. Smart grid infrastructure isn't just about power distribution. It's about creating an intelligent network that enables everything from renewable energy integration to electric vehicle charging networks, from smart cities to AI-driven power management. Companies in Grid's portfolio aren't just selling hardware. They're providing the intelligence that makes our electric future possible. Think about how this plays out in real life. Every electric vehicle sold creates demand for smart charging infrastructure. Every solar panel installed requires grid integration technology. Every corporate commitment to renewable energy necessitates smart grid solutions. Grid's companies are essential to all of these trends, positioning you to profit from multiple growth catalysts simultaneously. Number 3. iShares U.S. Broker-Dealers and Securities Exchanges ETF, IAI. What if you could profit not just from market movements but from every single trade made in the market? While most investors focus on picking winning stocks, there's a more sophisticated approach, investing in the companies that facilitate and profit from every market transaction. Enter IAI, our third-ranked ETF, which gives you ownership in the very infrastructure of modern finance. Think about the explosion of retail trading, the rise of digital assets, and the transformation of traditional finance through AI and blockchain. In 2025's dynamic market landscape, companies like Goldman Sachs, Charles Schwab, and Nasdaq aren't just participating in the financial revolution, they're orchestrating it. IAI puts you at the epicenter of this transformation, with exposure to the firms that profit regardless of market direction. Let me reveal how IAI's powerful metrics, 1.14% dividend yield, 11.87% dividend growth rate, and 13.81% share price appreciation, could transform your investment journey. With a modest 0.40% expense ratio, $40 annually per $10,000 invested, you're gaining access to the most sophisticated financial institutions on the planet. Starting with a $10,000 investment, your first year sees share price growth pushing your initial investment to $11,381, while generating $114 in dividend income, bringing your total to $11,495. This is where the power of compounding in financial infrastructure begins its work. By year 5, your investment expands through share price appreciation to $19,243, with reinvested dividends adding $722, bringing your total portfolio value to $19,965. Your monthly dividend income reaches $44.89. Consider this. You're now earning passive income from every trade, every market movement, every financial transaction flowing through these institutions. At the 10-year milestone, the compounding accelerates dramatically. Your share price component grows to $37,028, with reinvested dividends accumulating to $3,472, totaling $40,500. Monthly dividend income now flows at $142.76. Think about what's driving this growth: increased trading volumes, financial innovation, and the continuous evolution of market infrastructure. The 20-year horizon reveals the true power of investing in financial infrastructure. Your initial $10,000 grows through share price appreciation to $137,107, while reinvested dividends add $27,893, reaching a total portfolio value of $165,000. Monthly dividend income surges to $581.25, demonstrating how early positioning in financial infrastructure can generate substantial passive wealth. By year 30, the transformation is remarkable. Share price growth reaches an impressive $507,913, while reinvested dividends compound to $122,087, bringing your total portfolio value to $630,000. Monthly dividend income now powers to $2,221.88, Wealth built by owning the very foundation of global financial markets. Consider the catalysts driving this growth in 2025. The democratization of investing continues to bring millions of new participants to the markets. Digital transformation is creating new revenue streams for traditional financial institutions. Artificial intelligence and blockchain technology are revolutionizing trading infrastructure. Every one of these trends generates revenue for IAI's portfolio companies. But here's what most investors miss. Financial infrastructure companies enjoy unique competitive advantages. They benefit from network effects, regulatory moats, and economies of scale that make their positions nearly unassailable. Think about it. When was the last time you heard of a new stock exchange successfully challenging the New York Stock Exchange or NASDAQ? The beauty of IAI lies in its exposure to both traditional powerhouses and innovative fintech leaders. While Goldman Sachs provides investment banking expertise, NASDAQ drives technological innovation. Charles Schwab captures retail investor growth, while Intercontinental Exchange profits from the derivatives market. You're not just betting on one aspect of finance, you're investing in the entire ecosystem. Number 2. Global X MSCI Argentina ETF, ARGT. What if I told you one of the most compelling investment opportunities of 2025 lies in a market most investors completely overlook? While the investment world fixates on China and India, Argentina's transformation is creating unprecedented opportunities for informed investors. ARGT doesn't just give you exposure to Argentina's resurgence, it positions you at the forefront of Latin America's most exciting economic revival story. In 2025's global landscape, Argentina stands at a fascinating inflection point, home to Latin America's leading e-commerce platform Mercado Libre, vast lithium reserves crucial for the EV revolution, and some of the world's most productive agricultural lands. Argentina offers a unique combination of technological innovation, natural resource wealth, and essential commodity production. Let me show you how ARGT's compelling metrics, 0.97% dividend yield, 15.24% dividend growth rate, and 14.06% share price growth, could transform your investment journey. With a 0.59% expense ratio, 59 annually per $10,000 invested, you're gaining diversified exposure to Argentina's most promising companies. Starting with $10,000, your first year sees share price growth pushing your initial investment to $11,406 while generating $97 in dividend income, bringing your total to $11,503. This marks the beginning of your participation in Argentina's economic transformation. By year 5, your investment grows substantially through share price appreciation to $19,608, with reinvested dividends adding $657, bringing your total portfolio value to $20,265. Your monthly dividend income reaches $45.89. This growth reflects Argentina's expanding digital economy and resource development. At the 10-year milestone, the power of compound growth becomes evident. Your share price component expands to $38,437, with reinvested dividends accumulating to $3,563, totaling $42,000. Monthly dividend income flows at $162.75. Consider this: you're now generating passive income from Latin America's fastest-growing digital economy. The 20-year horizon reveals the truly transformative potential. Your initial $10,000 grows through share price appreciation to $147,776, while reinvested dividends add $32,224, reaching a total portfolio value of $180,000. Monthly dividend income surges to $697.50. Demonstrating the long-term wealth-building potential of positioning early in an emerging market renaissance. By year 30, the transformation is remarkable. Share price growth reaches an impressive $568,397, while reinvested dividends compound to $131,603, bringing your total portfolio value to $700,000. Monthly dividend income now powers to $2,708.33. Wealth built by recognizing and investing in Argentina's economic potential before the broader market. What makes Argentina particularly compelling in 2025? First, there's the digital transformation led by Mercado Libre, often called the Amazon of Latin America, which is revolutionizing e-commerce and digital payments across the region. Then there's Argentina's position in the global lithium triangle, crucial for electric vehicle batteries and clean energy storage. Add to this the country's agricultural prowess, providing essential commodities to a growing global population. But here's what most investors miss. Argentina's market currently trades at a significant discount to other emerging markets due to historical perceptions. This creates an extraordinary opportunity for investors who recognize the fundamental changes taking place. The country's tech sector is booming. Its natural resources are increasingly strategic, and its agricultural exports are more vital than ever in an uncertain global food supply landscape. Consider the practical implications. Every electric vehicle manufactured increases demand for Argentine lithium. Every expansion of e-commerce in Latin America benefits Argentine tech companies. Every global food security concern enhances the value of Argentine agricultural production. ARGT gives you exposure to all these trends through a single, efficiently managed investment vehicle. Number 1. ProShares Ultra Dow 30 ETF DDM. What if you could potentially double the returns of America's most established companies while maintaining the stability of blue-chip stocks? In 2025's market landscape, where uncertainty meets opportunity, DDM emerges as our top pick by offering something extraordinary: leveraged exposure to the 30 most prestigious companies in the market. Think about the power of America's corporate giants: Apple revolutionizing AI, Microsoft dominating cloud computing, United Health transforming healthcare delivery. DDM amplifies your exposure to these blue-chip leaders, offering 2 times the daily performance of the Dow Jones Industrial Average. But this isn't just about leverage. It's about accelerating wealth creation through America's most established companies. Let me reveal how DDM's remarkable metrics: 1.08% dividend yield, 21.43% dividend growth rate, and 16.50% share price growth could transform your wealth-building journey. Even with a 0.95% expense ratio, 95 annually per $10,000 invested, the growth potential is extraordinary. Starting with $10,000, your first year sees share price growth catapulting your investment to $11,650 while generating $108 in dividend income, bringing your total to $11,758. This marks the beginning of your accelerated wealth-building journey. By year 5, your investment explodes through share price appreciation to $21,847, with reinvested dividends adding $826, bringing your total portfolio value to $22,673. Your monthly dividend income reaches $50.91. You're now earning amplified returns from every success of America's corporate leaders. At the 10-year milestone, the power of leveraged compound growth becomes evident. Your share price component surges to $47,741, with reinvested dividends accumulating to $5,259, totaling $53,000. Monthly dividend income flows at $238.50. Consider this. You're now generating substantial passive income from the most stable companies in the market. The 20-year horizon reveals the truly transformative potential. Your initial $10,000 grows through share price appreciation to $227,972, while reinvested dividends add $52,028, reaching a total portfolio value of $280,000. Monthly dividend income surges to $1,260, demonstrating the long-term power of leveraged blue-chip investing. By year 30, the transformation is remarkable. Share price growth reaches an astounding $1,088,182, while reinvested dividends compound to $311,818, bringing your total portfolio value to $1,400,000. Monthly dividend income now towers at $6,300. Wealth built by amplifying the steady growth of America's strongest companies. But here's what most investors miss about DDM. It's not just about leverage, it's about leveraging quality. While many leveraged ETFs focus on volatile sectors or speculative trends, DDM amplifies exposure to companies with proven business models, strong balance sheets, and established market positions. Think of it as accelerating the growth of the most stable part of your portfolio. Consider the practical advantages. When Microsoft advances in AI, you get double the benefit. When Johnson & Johnson develops breakthrough treatments, your returns are amplified. When Visa processes more digital payments, your wealth grows faster. DDM turns the steady progress of blue-chip companies into accelerated wealth creation. The beauty of DDM lies in its unique combination of growth potential and blue-chip stability. While other leveraged ETFs might keep you up at night, DDM's focus on the market's most established companies provides a unique balance of amplified returns and relative stability. You're not betting on unproven startups or speculative trends. You're accelerating the returns of America's corporate leaders. Building your ETF power portfolio. In 2025's dynamic market landscape, the art of portfolio construction demands more than just selecting individual winners. It requires orchestrating a symphony of complementary investments that work in harmony. Our carefully engineered combination of 6 elite ETFs creates not just a portfolio, but a wealth-building engine designed to capitalize on the most powerful trends shaping our financial future. Through precise allocation and strategic weighting, this portfolio delivers compelling combined metrics that set the stage for substantial wealth creation. With a portfolio dividend yield of 1.69%, a robust dividend growth rate of 13.63%, and share price appreciation potential of 12.70%, all while maintaining a competitive 0.49% expense ratio. We've engineered a framework for both growth and stability. Your $10,000 investment journey begins with thoughtful allocation across 3 strategic tiers. The core foundation, comprising 40% of your portfolio, anchors your wealth building with $2,500 in SCHD for reliable dividend growth and $1,500 in SPGP for quality growth at reasonable prices. Your growth accelerators, representing 35%, position $2,000 in DDM to leverage blue-chip strength and $1,500 in GRID to capture the infrastructure revolution. The final 25% targets strategic opportunities, allocating $1,500 to IAI for financial innovation exposure and $1,000 to ARGT for emerging market potential. The wealth-building journey unfolds impressively from day one. Your first year sees $1,270 in share price appreciation combined with $169 in dividend income, bringing your total to $11,439. By year 5, share price appreciation grows your investment to $18,163, with reinvested dividends adding $1,337, totaling $19,500, and generating monthly income of $44.08. The 10-year milestone reveals the power of strategic diversification, with your share price component reaching $33,012 and reinvested dividends contributing $6,988, bringing your total portfolio value to $40,000. Monthly dividend income now flows at $158.33, demonstrating the growing strength of your passive income stream. At the 20-year mark, the compound growth becomes truly remarkable. Share price appreciation expands to $108,944, while reinvested dividends add $51,056, reaching a total portfolio value of $160,000. Your monthly dividend income surges to $633.33, showcasing the long-term power of strategic ETF integration. The 30-year horizon reveals the full potential of patient, strategic investing. Share price growth reaches an impressive $359,516, while reinvested dividends compound to $240,484, bringing your total portfolio value to $600,000. Monthly dividend income now provides $2,375, Transformative wealth built through strategic allocation and the power of compound growth. This portfolio's strength lies in its strategic balance across sectors, geographies, and growth drivers. When tech advances drive the Dow higher, DDM amplifies your returns. As clean energy infrastructure expands, grid captures the growth. While Argentina's digital economy booms, ARGT provides your emerging market exposure. Meanwhile, SCHD's growing dividend stream provides increasing income, and SPGP adds quality growth at reasonable prices. The $30 weekly millionaire strategy, transforming small investments into lasting wealth. Let me share a powerful wealth-building strategy that proves you don't need to be wealthy to build significant wealth. By combining our strategic ETF portfolio with disciplined weekly investments of just $30, we can demonstrate how ordinary investors can potentially create extraordinary results. This approach leverages our portfolio's compelling metrics: 12.70% annual share price appreciation, 1.69% dividend yield, and 13.63% dividend growth rate, creating a wealth-building engine designed for the long term. Let's explore how a $10,000 initial investment, combined with weekly $30 contributions, $1,560 annually, could transform your financial future. In your first 5 years, your journey begins impressively as your initial $10,000 grows to $18,163 through share price appreciation, while accumulating $1,337 in dividends. Your systematic weekly investments of $30, totaling $7,800 over 5 years, benefit from compound growth, expanding to $10,067. This brings your total portfolio value to $29,567, generating monthly income of $83.17, already showing the power of consistent investing combined with compound growth. By year 10, the momentum builds significantly. Your base investment expands to $33,012, with dividend accumulation reaching $6,988. Your decade of systematic $30 weekly contributions grows to $23,445 through compound returns, bringing your total portfolio value to $63,445. Monthly dividend income now flows at $178.44, demonstrating how modest, consistent investments can create meaningful passive income streams. The 20-year milestone reveals the truly transformative power of this strategy. Your initial investment grows to $108,944, while dividend accumulation reaches $51,056. 2 decades of systematic investments expand to $139,000 through compound growth, bringing your total portfolio value to $299,000. Monthly dividend income now provides $841.19, more than many people's mortgage payments, all from investing just $30 weekly plus your initial $10,000. At the 30-year horizon, the full potential of patient systematic investing becomes clear. Your base investment reaches an impressive $359,516, while dividend accumulation compounds to $240,484. 3 decades of consistent $30 weekly investments grow to $600,000, bringing your total portfolio value to $1,200,000. Monthly dividend income now delivers $3,375, potentially enough to fund a comfortable retirement, created through disciplined investing and the power of compound growth. This strategy's true power lies in its accessibility and sustainability. You're not betting on market timing or making risky speculative plays. Instead, you're systematically building wealth through a diversified portfolio of carefully selected ETFs, each chosen for its specific role in long-term wealth creation. When markets decline, your weekly investments buy more shares at lower prices. When markets rise, you're consistently building your position in strong, appreciating assets. The key to success with this strategy is unwavering consistency. Every dividend gets reinvested. Every weekly contribution maintains your carefully balanced allocation. Through market ups and downs, you're steadily building wealth through one of the most powerful forces in finance: compound growth combined with systematic investing. Before you rush off to start building your ETF wealth empire, take a moment to join our thriving community of strategic investors. If this comprehensive ETF analysis opened your eyes to new wealth-building possibilities, smash that like button. It helps more investors discover these market-beating strategies. Have you already implemented ETF investing in your portfolio? Share your experience in the comments below. Your insights could help fellow investors on their journey to financial freedom. And here's the game changer. Hit that subscribe button and notification bell to get instant access to our upcoming videos, where we'll dive deep into portfolio optimization strategies, market timing techniques, and exclusive ETF picks that most investors overlook. While this analysis reflects extensive research, remember that all investments carry risk. Past performance doesn't guarantee future results, and this content is educational, not financial advice. Always consult a qualified financial advisor before investing.